Hey YouTube, what's going on? It's Patrick with VectorVest once again with another GME video, getting everybody ready for the earnings announcement coming out tomorrow. Gonna be talking about what the VectorVest system is telling us about their earnings, take a look at the chart, get an idea from a technical perspective on GME, but then we're also gonna be speculating on some possibilities that could arise from the earnings call tomorrow after the market closes. So if you're into GME, don't forget, as always, hit that like button, hit that subscribe button. Every new subscribe helps us raise money for the Diane Fauci Fund. So with that, hit that like button, hit that subscribe button, and let's get into today's video. All right, so I'm starting off taking a look at the graph of GME. And as you can see, we have the price shown in candlesticks right here. We have a 3 and 8 exponential moving average, two of my favorite short-term technical moving averages that help show when short-term momentum is going higher and when short-term momentum is starting to dissipate. And then below there, DPO, stochastics, as we talked about on our Friday video. And then below there, the earnings per share, the EPS number. Now, if you can't tell already, our EPS number is going to be a lot different than anything else you ever see out on the market, whether it be from different brokerages or any other place you get your information from. Our earnings per share number is not only looking at the historical numbers, but also a forecasted 12-month earning per share as well that we blend together to get an idea of not only what this company is doing, but also what the major money or the analysts expect them to do 12 months down the road. This actually gives you a better advantage or a better picture of what's actually happening with their earnings, because it's not just stating, this is what's happened over the last 3 months, but it's stating this is what's happened over the last 3 months, and this is what the big money is expecting them to do, once again, 12 months down the road. And as the old saying goes, money goes where money grows. So before we talk about the earnings, which we'll get into here in a second, let's just talk about the chart and get into some of the technicals here. So I'm going to zoom in to a 6-month time frame by clicking on that 6M button in the lower right hand corner. And some of my favorite chart patterns to look for are wicked wedges or wedge patterns, or some people like to call them flag patterns. Essentially, if you're not familiar with it, what that shows is consolidation. So I'm just going to draw some lines on the graph here. So if we go from the highs, we can see lower highs here. But if we go from the lows, we see higher lows here. This is showing that as the stock price continues to move forward and trade in between these zones, that it's tightening and tightening. Essentially, the best way of thinking about it is like a spring. As you tighten and tighten that spring, it gets smaller and smaller until eventually it pops and then it goes bonkers, essentially. And that's what a wicked wedge can do. It's showing consolidation, prices tightening here. And when you break out of that wedge one way or the other, the probabilities are extremely high that you get an explosive breakout. So from a technical standpoint, I like seeing this. It's by far one of my most favorite patterns to look for because I've found a huge success rate with it. And finding it here definitely makes me excited about it. If we take a look at some of the other technicals that we see so far, we have DPO essentially pulling back a little bit, but still in positive territory. That's a good sign. Stochastics, as we talked about last week, hitting right around that 50% line. We're looking to see it hopefully start turning around or start curling back up here. Haven't seen that quite today. The market or the stock has been pulling back a little bit here today, but not much. But sitting right around that 50 line. And then one of the key things we want to look at here is the earnings per share. So I'm going to take off the volume at the bottom and just focus on earnings per share down here. I'm going to zoom out a little bit so we can see it a little bit better. And let's go to a 1-year look back again. Because when looking at earnings, it's a forecasted 12-month earnings. So looking at a 1-year chart is definitely more advantageous here. Now, one of the things that first would stand out to somebody who's not familiar with this is seeing that big dip right through the summer. Think about that though. Taking into account, one, the company was a brick and mortar company. They hadn't really done a whole lot of e-commerce. Everybody was shut down. People weren't going out. Yeah, you could expect to see their numbers drop and analyst expectations drop as well. But as things have come into the fall, we've started seeing new hope that, these restrictions are going to start backing off and that we're going to be able to start going out and doing things in public again. We've seen not only has GameStop improved their earnings quarter over quarter over the last couple of earnings performances, But we've also seen with this number showing us analyst expectations have now actually been improving since about the middle of September or so. This is a great sign, especially if you're a bull. That shows not only is this company been starting to slowly improve, but analysts, the big money, where that's who you want on your side, is also seeing very similar situations. Now, I'm not going to get into the short squeeze too much here today, but from a long-term perspective, that's really what we're going to look at here with GME. And I like seeing that when I look at their EPS number. Yeah, it's pulling back a little bit over the last couple of months, but overall it's staying fairly flat and is still higher when compared to the lows back in the summertime. If you're a bull, that's a strong sign. They've made it through this pandemic. They've come out alive. They're still around. And it's only been in the last few months that some real potential changes could possibly be coming for the long-term growth of GME. Now, speaking of that earnings number, let's talk about it. They have earnings coming out tomorrow. That will be a huge event for GameStop. Regardless of whether you're just some short-term trader looking for the MOAS to occur, or you're some long-term investor looking for growth in what this company can do going forward, there is going to be a lot of eyes on this announcement or this earnings report or earnings call. So a few things that I'm going to be focusing on, or that I have a feeling a lot of big eyes will be focusing on, of possibilities that could be announced from this earnings report is: one, they do an audit of their shares or a recall of their shares. Now, I've talked about this a lot over the last few GME videos that you guys seem to be enjoying. And in my opinion, if the research out there is true that shows that GME is shorted 400-500% of its overall float, and they do a recall, that could trigger the MOAS, or the mother of all short squeezes. This would be huge for that short-term bounce that just makes the stock explode. And those $100,000, $500,000 price tags per share could definitely be a real thing if this actually happened. On the downside of that, if that does happen and there does show a lot of manipulation in the stock, that could cause a lot of distrust and a lot of issues for this company going forward to stabilize their stock price. Yes, it would be great short term, but could cause some issues down the road. Now, I'm not saying it would cause issues. And, if they have that good performance and they have that team that's really dedicated to getting that e-commerce business up and they really have a nice pivot or transition into that platform, then that could definitely help stabilize things after the whole squeeze happens. But I'm not going to get into that. I'm not going to set a date for that because, that's great and all, but it would be very short term. And so far from what the news has come out with, RC on the board and all the changes that they're making and all the new people that they're adding to their board, I see a lot more long-term positivity for this stock than most people would do. And I think some of the bigger analysts, you're starting to see more news coming out that they're starting to see the potential with this as well. Now, that could be another possibility of an announcement in the earnings statement, is that they talk about Ryan Cohen, they talk about what he's doing. I'm all excited to see what he has to say about the plans they have in place to transition or pivot into an e-commerce store, and also what their plans are for updating their brick and mortar stores. Because in my opinion, you have to have both. The whole brick and mortar is going to be an ease of access kind of thing, but the e-commerce thing really has potential to grow, especially as more and more younger adults and teenagers get on gaming systems and more people are playing games nowadays. So you have to have a nice balance, and I'm really looking forward to seeing their plans on how they're going to balance that, and their focuses at first, and then their focuses after that initial stage one, let's say. Now, another possibility that could come from their earnings statement is that instead of announcing an audit of their shares, they announce a stock split. Now, if you're not familiar with it, a stock split is essentially taking, let's say, one stock and turning it into 4, 5, 6, however many stocks they want to. So you decrease the overall price of the stock, but you increase the supply of shares out there. Now, it may just be me, but if you've been following along with this, GME has been hovering right around that $200 mark, which if you did, let's say, a 1-for-4 split, would be an easy number to make that split happen on. All of a sudden, everybody who held one share now holds 4, and you also have the price target at $50 a share rather than $200 a share. that $50 level would keep it above that psychological level of 40 that, it started exploding from, or that it hovered around right before this most recent run up that we've experienced. From a psychological standpoint, I think staying above that $40 level would definitely be a benefit for them, and it would attract a lot of new growth. Analysts like seeing stock splits, and that would give more capital available to the company to be able to use for that long-term growth that they're looking for. Now, if this does happen, if they do announce a split, and let's say, for example, it was a 1-to-4, they've just increased their supply of shares available by 400%. Even if some of the DD that states that they could possibly be short 500 to 900% are true, if you increase supply by 400%, that's going to drastically reduce the effect of that whole short squeeze. And so therefore, in my opinion, it would pretty much make the probability of a short squeeze happening anytime in the near future basically zero. But that's okay, because if they do that for long-term investors, that would give a lot of benefit to the company and allow them to capitalize on this historic run-up that they've had and be able to use that money to help with their pivot or their transition into what they want to become. So I really like that aspect of it, that all of a sudden you have all these short-term traders trying to take advantage of a short squeeze. Then they read the earnings report, they see what they're trying to do, and that could convince them to say, you know what? Yeah, this stock is actually pretty good. I like what they got going on. I didn't expect to be holding this for a long time, but maybe I should hold on to these shares a little longer and take advantage of what's going on in the transformation and see what happens in the future. On top of that, you would also get a lot of big names and a lot of big analysts and big institutions probably starting to come on board and buy in at that 50 range, which would help keep that price going, help generate more revenue, and help really, get the company the money they need to successfully have this transformation. And then finally, the fourth possibility that could possibly come from this whole thing is they don't announce anything about the whole transition. They don't announce any new plans, any new updates, and it's a really boring earnings call, and all of a sudden everybody's just left scratching their heads and the stock goes down because none of the key topics that everybody's really looking for got addressed. I really don't see this happening, but it is possible. You got to keep in mind all possibilities. So that would be, the worst case scenario, which would really take a lot of the enthusiasm, I feel like, out of the stock. But once again, I really don't see them not addressing, anything that's gone on over the last few months. I don't see them not addressing the developments that they're putting into their pivot. I don't see them not addressing any of that. So I don't think that possibility is very likely, but want to throw it out there because it could possibly happen. So with that, these are my thoughts on it so far. What do you guys think about the stock? If you guys like today's analysis, don't forget, VectorVest can analyze any stock out there in less than 30 seconds. If you click on the link down below, you can actually take advantage of the free stock analysis report that we offer. All you have to do is type in your symbol, your email address, and we'll email you a copy of that analysis report right to you in a matter of seconds. So if you're ever interested in getting this kind of analysis on your own stocks, go check that out and see what it's all about. So until the next one, take care. Hope you guys enjoyed today's content. If you're still watching at this point, like the video, smash that subscribe button, and tell your friends about it and make sure they're subscribed as well. So until next time, take care everybody, and I'll see y'all on the moon.